Ladies and gentlemen, welcome back to another exciting episode of the Breaking Bitcoin Market Update, brought to you by Kraken Cryptocurrency. Hopefully everybody is doing absolutely fantastic wherever they happen to be in this great world, and however you happen to be watching the show today, whether that's on YouTube, D Live, Twitch, we're all over the place. I mean, it's just literally all over the place. How are you guys doing? Let me know in the chat. Let me know in the comment section if you happen to be watching this after the fact. We're going to be talking about a lot today. We're going to be breaking down, obviously, my current positions for Bitcoin, Ethereum, XRP, the other majors. We'll look at DeFi as well. We're going to go over the weekly, daily, and hourly charts, trying to find profitable trade setups. I'll show you guys what I see in the charts. We'll identify our current levels of support and resistance and what the charts are, or excuse me, how the charts are evolving based on our 4-year cycle thesis, based on everything that's been going on. If you guys have any chart requests, please put them in the live chat. Or again, if you're watching this after the fact, put them in the comment section and I will analyze them either in a post that I do on Twitter or I will do it in the next market update show. Apologies for a little bit of a lack in shows for the last couple of weeks, just dealing with things. Hopefully what I'd really like to be doing going forward is streaming every Monday, Wednesday, Friday, and that leaves me Tuesday and Thursday to focus on long form content and other things that I have to do for the trading group. Links down in the description, everything you could possibly need before we begin. And of course, support the show by liking and subscribing. It's the best way you can help us out. It's the only way people get their notifications. With that being said and out of the way, let's dive right into the charts and get today going. Let's actually start with a quick piece of homework, actually. Not homework, I guess, housekeeping. Let's wait for this page to load a little bit, I guess. But I just wanted to put out the housekeeping, which is the fact that we are putting out the market updates in a newsletter every Monday, Wednesday, and Friday as well. So if you want to get my technical analysis delivered right into your inbox, know exactly what trades I'm taking, exactly how I'm seeing the market, you need to get on the email list. The best way to get on the email list is just go grab your copy of the 5 mistakes holding you back from profitable trading. I apologize that the page isn't loading very well right now. Must be a mistake on my end. But that's the link down in the description, 5mistakes.krakencryptocurrency.com. We'll get you my free guide, and we'll also put you on the email list so that you will be getting the newsletter. So that's the easiest way to go do that. Quick copy trading update. Obviously, I am in a few long positions today. The copy trading has been going very well. We are up, I think it's close to about 5% on the month. We could go see my copy trades. So up about $520, which is about actually 10% of the account. Started with $5,000. So up about 10% in the last 2 weeks. Lowered hit rate, that's fine. We've been having larger wins. Like, for example, we had this nice $1,200 trade down here, a couple of losers, and now we're back getting it with some good wins. If you guys want to copy trade me, the link down there is below. We still have slots for 29 individuals, sorry. And I will show you in my analysis exactly how I identified these trade setups. You can see here, I've basically just been long on Bitcoin since the breakout, looking for these higher targets. And to make sense of that, let's actually get into the charts now. And we will get rid of hide all. Let's start off with Bitcoin on the weekly, as we are wont to do. Shout outs to the chat. We see Crypto Bull 21, good to see you, my brother. We've got Fetty Turkle in the house. Alex, we've got Magnus, we've got MT Coiner. Hey, good to see you, man. I've been seeing you here for 4+ years. Hell yeah, man. Crypto Lady asks, on which platform can I copy trade you? It's the Fairdesk platform. It's my new exchange. They're United States and Canada KYC friendly. Link is down in the description. And I've talked about Fairdesk a lot. I also have a dedicated video on the YouTube channel, how to copy trade my positions on Fairdesk. All right. Let's make sense of this weekly. Okay, Bitcoin, of course, has been in an uptrend for the majority of 2023. We are still evolving technically in that uptrend. We do have a higher high and a higher low here technically. So from a technical perspective, we can consider the uptrend intact. Therefore, logically, what is the trades we should be looking for? We should be looking for opportunities to trade to the upside. Whenever you know your directional bias, there are a multitude of types of setups, but the setups I essentially like to look for are dip buying. This is anytime price, anytime. Let's establish our prerequisites. When you're trading, you need to know a few things. before you worry about where am I going to put my stop loss, where am I going to put my take profit, you need to identify in what direction do you want to trade. This is called your directional bias. And there are numerous ways to establish your directional bias, but the most common way to establish directional bias is through what's called trend analysis. Trend analysis, of course, can be broken down into many different applications, but essentially we are looking for evidence of an uptrend. And most common ways to identify an uptrend or to identify the trend of the market is by analyzing price action, looking for higher highs and higher lows. This is confirmation of an uptrend. Looking for the slant of a moving average is a very popular one. Looking if price is above or below a moving average. Looking if a fast moving average is above a slow moving average. These are all very common methods to identify a breakout. Excuse me. There are also technical indication strategies using a momentum oscillator, for example. If the momentum oscillator is above the midpoint, then that is a common way to identify an uptrend. In our case, we're identifying an uptrend because not only of the sequence of higher highs and higher lows, but also Bitcoin's fractal. Bitcoin's fractal is just when a particular price pattern of candlesticks or bars repeats itself. And because the setup is repeating itself, we are assuming that the outcome will also be the same, or that it will rhyme. They say that markets don't repeat, but that they rhyme. So we are looking for a rhyme. And what we've identified, of course, through lots of analysis, if you've been following the channel, is that Bitcoin does this very particular four-year cycle, as people are calling it. And I've seen some interesting evidence saying that the Bitcoin four-year cycle is not related to the halving, that it's more related to the M2 money supply. In fact, there was this very pretty impressive paper that was put out by this German analyst recently that's been making the rounds on Twitter and on YouTube and whatnot. And I read the summary of the analysis paper, and I've watched a few videos on it now, and I just think that is, while it is true, while it's fundamentally true, hey, Mr. Unicorn, while it's fundamentally true, the M2 money supply is a macro factor that has helped support the rise of Bitcoin, yes. But specifically, when it's just not as important as the halving cycle. Like the halving cycle does on its own generate this particular pattern of fractals that we've seen. Sunny Decree has a pretty good video on it, actually, and he just says some very good common sense things where he says essentially, you know, if we go back to when Bitcoin was in the 2010s, 2011s, we were talking about a market cap under $1 million. And then when we got into the 2013s, 2014s, we were talking about a market capitalization of maybe $100 million. So what actually is affecting Bitcoin at that low market capitalization is not macroeconomics, the M2 money supply, the inflation rate, the Fed funds, none of that stuff. While it does affect price because it shapes the economic landscape in which all financial markets are operating, it's not as germane to what's actually happening with Bitcoin, what actually inspires these moves. So all that to say that we're just in the markup phase following the bear market capitulation bottom, which we've put in here with the collapse of FTX back in November of 2022. This is the bear market bottom in my analysis. We will not be going lower than this. Now we've rallied off the bottom, which always happens. The next, and I'm what we're looking at here. I mean, all I really care about is the big picture plan for me, and I've been prepared. I longed this rally. I'm still long this rally. I will look to short the pullback to 18 to 20,000, and then I will long prejudicely the bull market of 2024, 2025. That's how we're going to make money. That's what I'm here to do. I'm here to make money. And to make money, you have to make big bets. You have to make big, bold bets. So those are my big, bold bets. Long, short, long. Very easy. Now, the only question now is whether or not the rally is over. Are we going to rally up to like 35,000 before the move down to 18 to 20,000? Or are we going to have that move right now? And so this is when we're going to be looking at technical analysis to be determining what levels need to break, what kind of setup do I need to see, what do I need to see from the charts to justify either going short or going long. So since we have not broken the uptrend, my bias is to the long side. We recently drove down into a weekly demand zone right here. That demand zone stretches from 24,800 to 25,759. This is this zone right here. We drove down into this demand zone, and trading can be very simple. When you drive into demand, you go long. When you drive into supply or resistance, you go short until you see a breakout of one of those levels, and then you flip your bias and you trade in the opposite direction. We'll get into those. Is specifically what we want to see. But for now, again, Bitcoin is maintaining the uptrend. Price is evolving in this ascending channel, and we have not broken out of this ascending channel, nor have we broken the downtrend. The only way we could break this downtrend is by establishing a lower low. That would be a break of 24,800, although more approximately it's 25,000 is the support level that I want to see hold on the weekly basis. If we break 25,000, I will be shorting down to 18 to 20,000. I will be looking for that confirmation on the daily. So that is the bearish scenario. That is the bearish setup, looking for the breakdown of 25,000 and aggressively shorting down, not aggressively, but waiting for confirmation, shorting down to the $18,000, $20,000 level. So that's the big bold trade of the year setup potential. But we're just going to keep that in the back of our minds because that's not what we're looking at right now. We don't see any of the evidence. We're not going to try to be early to that trade. We're going to wait for the breakdown confirmation. And until that happens, we're going to be biased to the long side, especially as we've just driven down into a demand zone. Now, we are at the midpoint of the range, also our 20-period weekly simple moving average. This has previously acted as support here and here and here. And now that we've broken down through it, we would look for it to act as resistance. All right. The 20 weekly simple moving average is a very powerful level. And again, previously acting as support. Now we would be looking for it to act as resistance. All right. So if we are able to break above the 20 periods simple moving average and above the midpoint of the range, then I expect that we would go up to 30,000 and potentially higher. So for those who are sitting on the sidelines right now, the two big trades are longing the breakout to our weekly supply zone, or essentially the other trade that we could be looking at here is rejection from resistance here and a short back down to our demand zone. All right. Neither of those two trades have anything to do with the breakdown of support trade that we talked about earlier. Those are the two setups that are current to our current time period. That sounded so weird. Those are the setups that are happening now, or that are going to be happening. Whereas the breakdown setup isn't likely to happen for several weeks, if not months. So that's essentially the summary of the weekly chart. On the daily time frame, we can see that with a little bit more granularity. We've driven down into this demand zone, and a beautiful setup that I like to see here, many pin bars, big wicks down into our support level, into our demand zone. When I see that, that is indicative of accumulation, and that's exactly what happened. We had accumulation, and then a drive down, a spring, if you would, to break out above the resistance level of the accumulation. We even have a nice pullback. So we break out of resistance here around 26,400. You can see this is the resistance level that was established as we were accumulating. And then we break out above the resistance level. We stretch all the way up to the daily 50-period simple moving average. And then we pull back, retest that previous resistance as support, and push back up into our resistance zone. This is starting to look quite bullish to me. I like this consolidation underneath resistance. Note that we do have two pin bars up into our supply zone or resistance, which is generally indicative of a reversal of something that you would want to watch to short. But we have to contrast that with what has happened previously. Consolidation and big accumulation in our demand zone. Three rejections so far from this resistance level. Really the establishment of this resistance level in this daily FVG, this fair value gap that was created on this drive down, pushing back up. But this is looking like a breakout to me. So it's absolutely fine. You don't need to be taking a trade right now. There's no confirmation of a breakout. There's really nothing to be done with Bitcoin on the daily time frame right now so far. As you guys know, I'm already long Okay, so this has been a nice win for me. I've already reached take profit 1 for my long position. Breaking through this level will ascend us up to our second take profit area, and then my third take profit area is up in that 35,000. Note that I will also be that trade is separate from itself. The other trade that I would be taking, this trade that I'm in right now is based off of my algorithmic strategy, my pathways to profit strategy, and has nothing to do with my price action analysis. So that's why I'm long on this trade. If we do break out above this resistance level, I will be longing based on my price action analysis, looking for this breakout trade. So either candle close above, or if you want more confirmation, wait for your fast moving average. In this case, I'm using a period 7 simple moving average to cross above your resistance level, right? So if I see my red moving average trading above 28,500, let's call it, then I'll be looking for that long up into our bearish order block up here. Now, this is an order block. We can see this order block being established here with all of these block orders. They may not necessarily be block orders, but that is the theory behind order blocks. It is when large money traders use block orders essentially to take a large position and split them into smaller positions, and you can identify them because of tight volatility, tight consolidation. But you do want to mark out the whole order block. Perhaps it would have been okay if I just marked out this as the order block. I digress. But it exists either way. That is our next area of resistance. It begins at 29,500. And if you wanted to be conservative, you could say it could stretch to 30,411. So that's a much narrower area to look for a breakout above. As you can see, I'm using a very wide zone. So I'd be patiently waiting for the breakout of this level if we were to get up there. Not too much to say other than that on the daily time frame. Again, we do have consolidation underneath resistance. We have not broken out yet. So there's really not too much to do except sit on your hands. If we see more pin bars like this bearish candle and this bearish candle up into our supply zone, and we see rejection away, then we will certainly be moving back down into our demand zone. Kind of the level to watch on the break of that is about 27,200. As I said earlier in the premium group, if we lose 27,200, which would be a breakdown of this consolidation level, so basically our hourly zone that we're trading in right here, then I've kind of lost all faith in this rally if we do break 27.2 and it's moving down into the 25,000s again. But again, either a candle close above 28,447 or more patiently waiting for that simple moving average to cross up. That way you can catch a retest if it does occur, is going to allow you to trade up into this zone, targeting about 32,000 and 35,000 if you want to get real jammy, looking for the breakout of the bearish order block as well. Hey, Luke Jones, good to see you, my friend. It's never going to be a thing without the King Zucchini. Let's see. Me Big Mo says, I disagree. 28,921, 29,400 is a short area, not a long, just because we broke through the 20 simple period moving average. Let's see here. 28,921. Right. Yeah. So you're just essentially, yeah, exactly. I have the same area, although mine's much wider than yours. I think you're just simply looking at this order block area right here, or this supply zone right here. Yeah. You're certainly targeting this area as a supply zone, and it is. Yes. It is previous support that is broken down. We would expect it to act as resistance on the way back up. But I think breaking the midpoint, and certainly you might be completely correct. We might break above this level, either whether we're looking at that 20 period weekly simple moving average or just this structure on the daily, and reach this level and have a pullback. In multiple ways that could look, since this is acting as a resistance level and this is going to be acting as a demand zone or a support level. If we do break above it, let's say we break above it and we do encounter resistance here, we could either way. You are correct. This is a short setup opportunity. I wouldn't blindly short it. I would want to see confirmation. I've already talked at length about the confirmations that I like to see. I like to see pin bars. So if I see pin bars up in this area, and then there needs to be a decisive movement away. When reversal trading, I think that in my experience, I'm much more profitable reversal trading when I wait for confirmation, right? I went back and forth on it for years, and I've devised dozens of strategies with different ways to execute. But waiting for that confirmation, even though when you're right, you miss the head of the trade, you get the big juicy middle of the trade, right? And that's a lesson that I learned from trend following trading that has actually served me quite well in reversal trading. So yes, you are absolutely correct. This is a resistance level. This is a supply zone. And yes, we could obviously burst right through it and not even sweat if Bitcoin has a huge uptrend. But yeah, I would be expecting to see some resistance there. So either way, there's a short setup back down to this demand zone. Then we can wait to see if this one breaks, short back down to this demand zone. Or we could find resistance there, come back here. That would fulfill the retest of the breakout support level, and then we push up. Either scenario works, but either way, you are correct. That would be an area to potentially short from. Again, I would recommend waiting for that confirmation. Don't just blindly short this level because it's supply. You want to see pin bars, and then you want to see a movement away from the level. Yeah, it would be the last wave of this rising wedge. And then, yeah, talking about needing, yeah, awesome. Okay. Now we can go down to the hourly for Bitcoin. Again, Bitcoin's pretty interesting. We do have some nice holding of our resistance level right here. So I do like this so far. Yes, we do have a lot of hourly pin bars, but so far we haven't gotten a big rejection away from this area. So just something to watch for here. I would want to be, I want to be a little cautious if price does leave the resistance zone. I'm going to be looking probably to take profits on these hourly day trades of mine. But essentially on the hourly, we had a nice consolidation, pump up into our resistance zone, also my take profit area. Now we've just had a nice, basically full retracement of that movement. And we have made forward progress. Bitcoin has made forward progress. We've had a nice SR flip. So we had this resistance level here when we were consolidating underneath resistance over here, successfully broke through that. And now we've pulled back and retested this level as support. So overall, price is bullish. We have been moving up nicely. We've hit a resistance level and we have formed higher lows. So on the intraday, on the meso timeframes, we are in an uptrend. We are forming higher highs and higher lows. And we've entered into a bit of a range for pause and consolidation. But I do like the way price looks right now. Again, I am long. I am betting on this kind of continued break, at least up to my take profit target of about 28,135. So basically just back up to the top of this resistance level right here. Alex says, interesting how we got on a Friday afternoon. We are on a Friday afternoon with Bitcoin stuck right below the 200 weekly and the 200 daily simple moving average and the 20 weekly, which now have converged to the same $28,000 level. Yeah. So, and again, I've had a couple of trades throughout this zone. Let's see here. I longed from demand up to our supply zone. I shorted from our supply zone back down, and then I longed again back up. All right, so I caught these three trades, one of which was a loser. The short down was a loser, yeah, because I had set my stop loss right here, and we got a real nasty wick, right? We got a real nasty wick there. So thought my stop loss would be safe here. Unfortunately, it was not. So I wasn't able to profit on the short, and that is, if we go to my copy trades, you will see that. Yeah, it's this one right here. This is the short that I lost money on. But I made money off of, I had two shorts. Yeah, so the first short lost. The second one, I had a wider stop loss, luckily. And then this is the long. So yeah, just exactly what I was saying. I had two shorts from here. One lost, one won, because I put that stop loss up here. That was the smart thing to do. This was too close in retrospect now that I see that. So short down, long up. Those were the two trades that were successful there. And then we just had breakout of this range. And this is just exactly what I saw, what I did. It was at the open of this candle that the moving average actually crossed above my resistance zone and gave me the confirmation that I needed. So you can see that I didn't get in at the open. I got in right up here after the candle had been open for a few minutes, basically right at the open of that hour though. 27,696, give or take, was where I had entry in this. And the reason why, I mean, I'll tell you why. What do we have here? I mean, we have this nice consolidation range. We're making progress. We have an SR flip, right? So we're holding previous resistance as support. So, we shouldn't be like doomsaying, like, oh my God, we're going to break down. Like, no, like we just flipped SR. Like this is bullish. And so we established this demand zone over here. We really establish it here, but we confirm it here. So this is our demand zone now. Multiple trades here, just ranging. But the most important thing for me, and the reason I was more aggressive with the long here today, was because after this breakdown, right? So we've got price basically at the midpoint of the range on the hourly, and we have this huge death candle down, this almost 2% candle in an hour, down into our demand zone, and it holds. And then we immediately pump right back up. So this indicates to me that we just flushed a lot of long interest, and we just took a lot of long-sided traders who were trying to buy this breakout. We just flushed them all out. And this immediate massive bullish response in 3 hours all the way back up to the top of the range, that's quite bullish, guys. And again, we might reject from here, right, down into our supply zone. But at this point in time, I don't want to see this fail, basically. I could stomach, price could come back here, that's fine, but there's no reason for price to hold below the midpoint of the range at this point in time. And if that happens, this is just another failed breakout. Crypto Bull asks, do I think gold is good, long, or still more down? Listen, I don't know. Costco is selling 1 ounce bars of gold right now. So what do you think? It's probably time to sell. Like if Costco's trying to get rid of their gold. I jest. We'll take a look at gold in just a second, brother. We do need to be cautious. We've got quite a lot of pin bars here. So again, we'll just wait and see what happens. See if price continues this sideways consolidation, forming a bit of a pennant. But let's move on to Ethereum. This is a good opportunity for you guys to ask any questions or get in your chart requests. All right. Ethereum here is significant, just in my opinion, like less bullish than Bitcoin. We know that Ethereum is underperforming Bitcoin. Why do we know Ethereum is underperforming Bitcoin? Because all we need to do is look at the Ethereum Bitcoin chart. Okay? The Ethereum Bitcoin chart has been trading in a range since 2021. Okay? Ethereum has not been able to make any significant, long-lasting overperformance of Bitcoin for over 2 years. I mean, it's just insane. And the Ethereum Bitcoin chart just continues to trickle down. Like we are approaching the area of the chart and that I want to pay attention to. So we are approaching this demand zone for Ethereum, where we will look for confirmation for a very particular trade. We can see that this range is about a 50% range, meaning that the value of Ethereum within this range multiple times over the last 2 years has appreciated about 50%. So there is a strategy here to get that return on your entire Bitcoin holding. And what you have to do is that when the time is right, when you have the trade set up, you need to convert all of your Bitcoin into Ethereum. Okay? You need to convert all of your Bitcoin into Ethereum. Excuse me. And then you hold that Ethereum as Ethereum until we get back to the top of the range. And then you convert back into Bitcoin, and you will have 50% more Bitcoin, or whatever the movement that you're trying to capture. But this is a very particular trade. This is a trade that I've done twice over the last 2 years to increase my amount of Bitcoin, and it's been very, very, very helpful. Again, you're not going to increase at the moment, you're not going to see an increase in your NAV, your net asset value of your portfolio. Because the price of Bitcoin, the USD price of Ethereum and Bitcoin will be trending up and down correlated. But you will have more Bitcoin, and then therefore, when your portfolio does appreciate, you will see the impact then. Johnny Boy Crypto, good to see you, my friend. He says, "What's your thoughts on UNG or Boyle natural gas ETFs?" I will take a look at those in just a second, my friend. My heating oil company has been calling me to fill my tank for a 5% discount. Never happened before. My heating oil company has been calling me to fill my tank now for a 5% discount. Never happened before. Oil going down soon too. I mean, oil has been on an absolute hell of a tear. So whenever you see something that is shining very brightly, you know that it's not long before it enters its kind of fell swoop as well. I haven't taken a look at oil too strongly. I think that when it comes to kind of those big macro movements, it's significantly less technical analysis than it's going to be the macro factors that drive it. And right now, the big macro factors that are driving the oil boom are, I mean, there are many things, but there is a big armed conflict going on in the East right now. And I think that if history serves well, as long as there is armed conflict, the price of oil typically goes up because oil is necessary for war, modern warfare anyways. And modern warfare is necessary to have any chance in the modern world. So unless the situation over East dies down, I don't think that I wouldn't anticipate oil to drop anytime soon. Obviously, like there can be monthly volatility or weekly volatility. We could go down or up a little bit, but I would expect the trajectory to remain the same as long as all other things remain equal. Yeah, so yeah, Ethereum just trending down. Let's take let's pause here before we dive into the Ethereum USD chart, and let's take a look at the requests. The first one we had was for let's look at okay. Let's look. We're going to start off with the ARCA Spider Gold Trust, GLD. Paper gold for the win. And it's been a little bit since we've mocked up the chart. So let's just take a little bit and see what we've got here. All right. So I am initially going to say we will refine this zone a little bit more once we get down to the daily. So we've got our demand zone, and we've got our supply zone, and we have the midpoint of the range. Okay. So based on this weekly range, we can identify our premium zone and our discount zone. Price is just entered into our discount zone, so it is a better buy. We do have a little bit of a triple top happening, or an M pattern. That M pattern won't complete until price comes back down here into our demand zone. Notice that we already have a deviation outside of our demand zone, outside of our demand zone, when price drove down here to the 151s. So if we break down again, that to me would be the completion of the M pattern. One way that we can kind of predict price targets is not just with Fibonacci extensions, but they're also measured moves. So we can take a trend line and we can measure the range, and then we just project down from the breakout zone, and we would get a gold price target down here around 118.96. say 117 to like 123 would be a measured move area, which would be putting us back down into the previous weekly consolidation range. Notice that also we're just up in this range previously, and we've made some new highs on GLD since 2012. So this is good. I mean, obviously gold has been in a nice uptrend, and I don't want to get too above our skis. Obviously gold has appreciated nicely over the last 8 years, brought us up to where we are now. But what we've had since 2020 is essentially this big, what is starting to look like a distributive range. All right. But again, for a trader, this is beautiful. For a trader, this is what you want to see. You know, something that is nice, easy, makes a lot of sense, has repeatable patterns and very clear instructions for what to do if those patterns break. So we've been consolidating between 194 and 157. So when price comes down into our discount, we should take it. When price goes up into our premia, we should short it. I mean, this is pretty simple. And then breakouts above or below each level leads to a, basically a trending position, looking for a big target below, looking for a big, expansion of that volatility. All right, so I'm pretty happy with our weekly demand zone. And I do want to refine our supply level. We're just finding essentially what I think is the most relevant up candle. Usually I do down candle, but since this is an ETF, the price action is a little wonky. We're just going to mark this level off. I think this is the most, reasonable fit or fair fit for the zone that we're trying to identify. Here we go. And we're going to call this a weekly supply zone as well. Okay. So now we've tidied up that area a little bit. We can get rid of some of this and make our chart nice and neat. All right. Looks good to me. Hey, Dan, good to see you, my friend. All right, so here's our weekly demand zones. Here's our weekly supply zones. We just broke down through the midpoint of the range. So at this point in time, after such a big move down, I would be looking for a pullback to retest like 175, 176, the midpoint of the range. And then I would be looking for a rejection from that area. So like price pulls back, and then I want to see bearishness, and then we can short back down into our demand zone. And then we long from our demand zone. Pretty simple. Yeah, daily time frame. Again, we can already kind of see that bounce happening. Looks like we've had about a sell-off in gold for about the last week or so, a little bit longer. And the last, like two weeks really. The last 4 days has been kind of been a recovery from that sell-off. And notice as well that we also drove into a demand zone here on the daily, which is also an SR flip of a previous resistance level. So pretty important here. Let's go ahead and mark off we go. So now we have a nice demand zone on the daily. So we've got our daily demand zone. And notice that we also had this previous level of support, but it is no longer support. It is now going to act as resistance. Let's see here. So we've got a nice target, and we also have a nice zone to be looking for shorts from if and when price gets back up here. Okay. So price just drove into a demand zone at approximately $168. I would be looking for the long unless we get a daily close below. I would be looking for a long up to about 176 from here, and then I would reevaluate at 176 on the daily. Hey, Profit Bear, good to see you, my friend. So that's gold. And Johnny Boy Crypto, who I have not seen in forever. UNG and Boyle by request. Let's do UNG. Not crypto. On the ARCA. Oh, we've got a look, it's an altcoin. What? Oh, come on, guys. You know I'm kidding. This thing can't be an altcoin. Look, it had another big rally after its first big pump. It looks like a shitcoin chart though, huh? Wow. Okay. Well, let's start off on the weekly. Okay, so for pretty much all of 2022, the price of natural gas has simply collapsed. I mean, this is rough. So we've got. Let's just mark off our levels. And let's say here looks pretty good. Okay, so UNG obviously trading in this relatively tight range. We're going to refine this a little bit better on the daily. Let's just go ahead and do that. Okay. And we have our supply zone. Come on. All right. I mean, I like this. This is starting to look pretty impressive. You know, we've got this big wind up, this big consolidation, consistently. I mean, you know, obviously dipping down a little bit, but pretty consistently here, holding the midpoint of the range as support, which is good to see. And then, yeah, just nice big expansions right here. This is all looking pretty good. I would long this. Yeah. I mean, we don't have a confirmed breakout yet. There are two strategies that I like to utilize for waiting for a confirmed breakout. Unfortunately, both of them are going to take quite a bit on the daily, but that's okay, especially if we get a breakout pullback, which is much more likely on big ETFs and assets like this, as opposed to something that's a little bit more volatile, like cryptocurrency. But essentially, we can either wait for a daily candle close above a level to confirm a breakout, which is previously the strategy that I was using a lot. The new strategy that I'm using a lot, which I quite like, is waiting for our fast moving average to cross and close above. Look how waiting for the 7-period moving average on all of these saved you from buying a breakout, because the 7-period moving average never closed above resistance. So either way, I would be looking for either that close above $7.82, or I would be waiting for our 7-period daily moving average to close above $7.82 as well. Other than that, I would just keep watch of this chart. Obviously, the two scenarios, even on the breakout, are just going to be the straight breakout, which is why entering aggressively can be good. But waiting for that confirmation can often let you, let's say that happens, then we get the pullback, and then you buy the retest. All right. Which again, those PBRs, those BPRs, those breaks, pullback, retests are much more common on more traditional assets like this traditional FI. But again, I wouldn't buy now. We don't have any confirmation of a breakout, and all price has done is just drive back into resistance. Now, again, visually, this does look much more breaky outy. We drove down to demand multiple times. And like I said, we were able to hold the midpoint of this range successfully, which is more bullish, significantly more bullish. So again, as well, if you've been analyzing this for a while and you want to take a more aggressive position here, that's fine. If you do take an aggressive position here, I would put your stop loss right below the open of this daily candle. So around $7.42. I would not hold all the way back down if you wanted to buy aggressively in this range. But if this is a real breakout, I would just recommend being cautious and just waiting for that actual confirmed breakout here, and then look to take price up significantly higher. Because if we just do a measured movement of this range, yeah, I like that. That's confluent with this previous rise right here. So I would say we would then have a target area. I'd say we'd have a breakout target of about $9.32 to $9.93 for UNG. Thank you for the request, my friend. Let's see. Our Profit Bear says 80% burn of token supply coming December 25th by the rumor. Of what? Bitcoin? We're going to burn 80% of the token supply? That mid-August candle above. Yeah, that does look sus as hell, right? Filling that gap and likely pull back down to the bottom of the. Yeah, that's what I would certainly consider. What does this breakout look like? Yeah, it's like a 25% movement. That's not bad. That's not bad. ETF trading. Boyle. ProShares Ultra Bloomberg Natural Gas. We've got more natural gas. This chart looks exactly like the previous one. So exact same thing. We're in this accumulation range. Doesn't look like we've successfully broken out yet. I would be looking for rejection for a short, or I'd be waiting for a confirmed breakout to trade alongside. So absolutely the same thing here on Boyle. Yeah, Johnny Boy Crypto, my thoughts on the higher time frames or at rock bottom with a lot of volume. Yeah, and again, I like that. Keeping it very simple. You identified something that was in distress. Distressed assets are going to have high profit probability. And you also noticed that it was holding, which is certainly visually a much safer buy than to buy a falling knife. So I think good eyes, good catches there on natural gas. And I think those are definitely promising charts. Oh, for real, man? Let me see. Oh, okay. I see her. Remember, for 33 months. What's going on, my brother? He says, Jesus is leading the pack. Much love. Hashtag Jesus coin. You didn't send a super chat. Super chat means you got to give money. You just gave time, brother, which is absolutely like very valuable. Like, thank you so much for watching the show for so long. I really appreciate it, man. I really, really do. Thank you so much. I'm sorry that I can't buy millions of dollars worth of Jesus coin. Thanks, Johnny. Okay, I think. Oh, I see what you're saying. Oh, so you okay. Thank you, man. Thank you for your financial support. I appreciate it, man. It helps keep the channel alive. Let's see here. What? Were there any other requests? I think that's it, right? I think that's it. That's all we have for the requests. Yeah, gold. And yeah, okay, cool. Let me know if you guys got any more requests. We're going to continue on with Ethereum now. Yeah, so we talked about the Bitcoin ratio being down, and I don't think we're in the area where we want to be swapping our Ethereum for Bitcoin yet. Ethereum on the weekly, again, uptrend, sure, right? Higher highs, higher lows, but God, this just looks so unimpressive. It just looks so unimpressive. Our moving averages have completely flattened out on the weekly, indicating that the bearish trend is paused or ended. We have a nice little uptrend, which our fast moving averages have responded to. Similar to Bitcoin, our 20 weekly simple moving average, which is a very powerful level, has previously been acting as support. And now that we've broken down below it, we would potentially look for it to act as resistance, which it currently has. We are in the discount area of price. And unfortunately, we do have this, I don't think it's super important, but we do have this wedge. But if we do break down, I believe that if we do break down from these levels, we will be revisiting our demand zone around 1075. Moving down to the daily time frame, again, we can see pretty clearly that we've obviously had this nice bearish movement down into, we do have this daily demand zone that we have been accumulating in. We pin barred down into it multiple times. And now that we have come back up to retest the midpoint of the range again, which we longed this and hit our first TP, price is driven back down into our demand zone. So, I mean, this is just a pretty classic bullish setup, right? Buying the demand zone and looking to retest the range again. Because if we fail this level, then we're going to be shorting, looking for the breakdown of this area right now. So a completely different setup from Bitcoin. Even though these things typically do move similarly together, but just a completely different setup. Ethereum is significantly more bearish in my estimation. Here on the hourly, again, just keeping it very simple, we drove down back into that daily demand zone. Not only that, a double bottom, so very nice. I love to see that. And then just a nice hourly breakout of the 50-period moving average. We are up here. We are looking at what I would normally consider a short setup. Right, we're in a downtrend on the hourly with all these pin bars at this resistance level here, and we've just pumped right back up to it. So again, if we break down from here and if we lose the hourly 50, so 1633, if we get back down to 1633, then that's probably going to be my early trigger for the short. Like, this rally has just completely failed. There's really no reason, in my opinion, for us to revisit the demand zone before continuing kind of this nice movement up. Another way to look at this too is that, again, we had this accumulation zone and we had this big markup phase, and we've retraced all the way back down to retest previous resistance as support. So I would like to see that hold and make some forward progress here. But again, yeah, Ethereum just very, very different from Bitcoin. Prophet wants us to look at TA for Jesus. Yeah, sure, man. We'll look at Jesus. Look at the old JC Weth. Man, this thing's been going bonkers, huh? Holy crap. A coin that has a secondary pump? Oh my God. Even a tertiary pump? All right, what do we got here? Yeah, so I had marked this level out, and we've now broken above that level to the tune of, well, I can't get any price differences here. Let's see what we got going on, though. Okay, anything? Yeah, here. Yeah. So I'm noticing where this wick stopped, and it's essentially right where these wicks stopped as well, indicating that this is a pretty important level. So that's going to give us our supply zone that we just drove into. So there is our big picture supply zone that we just literally hit. Okay. And we also have this demand zone down here that we would want to hold now that we have broken above it. Also, basically, I really like that level too, because it's also a fair value gap. It's also a fair value gap. Yeah, so I think this is pretty clear. I think we have our daily demand zone down from 1390 to 1895, and we have our daily supply zone from 3454 to 3881. Now, we just drove into that demand zone, so I would expect to see downwards price pressure. Obviously, there is a lot of interest to sell at this level. If we are able to get back, then, I mean, we just have to kind of pick a target at this point in time because we don't have a lot of conclusive price action. But I would be targeting something like this. This is the next level I would be targeting. Actually, to completely take that back, I'd be targeting this level first. This fair value gap. So, two potential targets, 6125 to 6627 and 7132 to 7363. Those are the areas I would be targeting for a breakout. Listen, unfortunately, and I don't like to shout outs to Payday, calling Jesus coin 5 days ago. I don't like to rain on people's parade. So listen, man, I know you really like the Jesus coin, and hey, man, our Lord and Savior. But, there's just not a lot of good historical evidence of altcoins, especially like low market capitalization ones, making any significant forward progress back up into their all-time high territory. Like something like this, yeah, sure. Where we put in a big rally off of the bottom, that's absolutely fine. We'll see those. But to say that price is going to creep back into this territory, it's just exceedingly rare, man. So I don't want you to get too crazy about it. This is a nice movement, man. I would trim some profits here if this were my trade. I would have looked to trim profits here, and you're still fine trimming some profits here. That's absolutely fine. Hold on to a little bit. you can buy back in, like, for example, like if we break 38.81 and then look to take a big trade up to these levels. I mean, that's a 2x, right? From here to here, that's 2x. But yeah, I mean, we drove back up into this resistance level, this supply zone, where we've been unable to break above it again. So either we have, with altcoins like this, like low market capitalization ones, again, TA is fine. TA works really, really well, but it's not what drives price. Like, it's just hype and narrative, right? So altcoins tend to like just go vertical and then it's over with, right? So you never want to get out like too early. And I would say that like over here when something's new, but this has already had a big flush out, man. It's just statistically very unlikely that we make it above this level. Now we absolutely can, and if we do, hey, buy that breakout and like let's go. Like some coins do it, but I wouldn't bank on it, man. I wouldn't bank on it. Yeah, you just showed me a green chart. I love it. I'm still talking crap about it. Still saying negative things about your green chart, man. But yeah, good movement. Trim some profits. Chill. There's no reason for price to break down below 1895 now. So full retracement of this area. Like, again, we can come back and like test these levels. That's fine. And like form a new consolidation at a higher level. That would be bullish. And then it's fine. But, really like going back down below this range should be completely uncalled for at this point in time. If Jesus coin is moving, Jesus coin is moving. It's time to get moving. It's time to get moving. All right. The last asset that we're going to look at today is going to be XRP. We've been, again, I think that people are going to lose a lot of money ignoring XRP. XRP is just probably my favorite of the other majors. I know I used to crap on XRP a lot, but whatever, they're doing their thing. And I do have a lot of respect for Ripple Labs for standing up to the SEC and setting good precedent for the rest of the crypto community. So it goes to show you how you can be you can be considered a negative actor in the space and then do good things that benefit the space. And now we like you. Right? So always be doing good things. But XRP, very, very similar to kind of the natural gas chart that we were looking at earlier. XRP is consolidating in between its weekly supply zone, 55.72 to 53.71, and its current demand zone between 28 cents and 32 cents. We are currently consolidating right underneath the upper part of that range, the resistance level. So we are in high premium. So relatively, XRP is not a good price to buy at right now, but we do have a potential trade setup. I think that if we are able to break above 55.72, we can get some really nice expansion. Basically back up to the 90 cent mark, right? So we're looking at almost a 2x here. Potential for XRP. We could basically run back up towards $1 if we are able to successfully break our resistance level here. If we are unable to break our resistance level here, this fair value gap, this resistance level has sent price back down multiple times. Again, what are we seeing here? Same thing that we saw both on Jesus Coin just a second ago and on the natural gas charts that we were looking at earlier, where after multiple drives down into demand, we are now consolidating above the midpoint of the range. And that consolidation above the midpoint of the range is the first thing that I like to look for when I'm looking for a potential breakout. Very common that when we're looking at big pronounced movements like this, we will see that consolidation in the upper area of the range before a significant breakout. So XRP, not one to sleep on. Buy the breakout, or again, we can look to short the breakdown. You see that on the weekly. On the daily, again, nothing super conclusive. We're starting to see daily pin bars up into this area, but again, we're just creeping back up towards it, so nothing crazy. And on the hourly, again, price just went from demand up into supply. Very simple. Very easy. Now we're just pulling back, retesting this previous SR level. Looking for this level to hold and actually make a higher high here for XRP. Otherwise, it's going to fail. I'll be taking profits on my positions, and we're back down into our demand zone. All right, ladies and gentlemen, that's pretty much all I have for the show. that's pretty much all I have for the show. I want to thank you guys so much for joining me today for another exciting episode of the Breaking Bitcoin Market Update. There are many ways to get involved with the community, to improve your trading skills, to support us. These are a wide range of things you can do. If you want to copy trade me on Fairdesk and earn while you sleep, probably not unless you live in a completely different time zone from me. I'm going to be trading while you're awake, but the link to do that is down in the description. You will automatically receive VIP access level 1, which means you're going to be getting a huge discount on both your maker trades and your taker trades, which is limit order and market order. So you'll be getting discounts on those, VIP level 1 for all the futures trading that you want to do on that platform. And you can also copy trade me. So the link for that is down in the description. Highly recommend going and downloading my free guide, The 5 Mistakes Holding You Back from Profitable Trading. I have been mentoring thousands of students over the last 5 years on how to build profitable trading strategies in the cryptocurrency markets. And this is a quick starter guide, gives you everything you need to get up off the ground and running and building your first strategy. It's completely free, and it will also get you on the newsletter list so that you can get those market updates delivered right into your inbox every Monday, Wednesday, and Friday. Link for that is down in the description as well. If you have already gone through that material and you are looking for more hands-on, real help building your first trading strategy, check out our website. You can join our premium trading group where you'll get access to our signals, our market updates, our mentoring, and that's where you can choose to work one-on-one with me and my team to build your own trading strategy. Other than that, you can like and subscribe to the channel so you never miss an episode. And we will be back on Monday with another exciting episode of the Breaking Bitcoin Market Update. Until then, have a great weekend, guys. Enjoy yourselves. Go get some fresh air. I know it's probably getting a little cold in most places. It's starting to get really chilly here in Colorado. But enjoy your lives, guys, and trade safely, as always. Cheers now.